Inside America's Boardrooms, the informational show for board members and corporate secretaries. Brought to you with Knowledge Partners, NASDAQ, the Center for Audit Quality, and PwC. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, R.R. Donnelly, and the Society of Corporate Secretaries and Governance Professionals.
Welcome to this edition of Inside America's Boardrooms. I'm TK Kerstetter, CEO of Boardroom Resources, and it's my pleasure to welcome you to the show. Today we're going to be talking about corporate directors voicing their strong opinions about governance and boards. And joining me to be our expert on the show today is Paul DeNicola, who's the Managing Director of PwC's Center for Board Governance. Welcome, Paul.
Thanks a lot for having me, TK.
So PwC has done this survey for some time, and it's their annual corporate director survey, and this year it's titled Governing for the Long Term, Looking Down the Road with an Eye in the Rearview Mirror. So probably a good place for us to start is talk a little bit about the survey itself before we get into the results.
Sure. So the survey was conducted in the summer of 2015. And we had a very good response rate to it. Nearly 800 public company directors responded to the survey this year, so a real nice sample size. We asked directors about a variety of different governance issues, ranging from IT oversight to risk to strategy to board composition. And the population of directors that responded, nearly 3/4 were from companies with over $1 billion in annual revenue, so rather large set of companies. About 86% male respondents and 14% female respondents, which sort of aligns with the gender distribution averages of public companies. The tenure of board members was relatively even across those who had been on a few years, those had sort of 3 to 5 years, and then those who had been serving on the board for 10 plus years. So nice distribution there. And the overall theme was governing for the long term, because a lot of the results point to the fact that directors are becoming or have become more long-term focused when it comes to their approach to corporate governance.
So it sounds like a great sample size and sample. So let's get to the results. So what was one of the most significant things that jumped out to you when you got the results back after the survey?
So what jumped out to me immediately was board composition and some of the questions we asked there. And it's no secret there's been a debate over renewal for public company boards. You hear it in the comments of investors at some of the large conferences. You see it happening in the debates around proxy advisors looking at the long-term independence of board members. There's a focus on board tenure. There's more of a focus on board diversity. So the board composition area was really key. To start with, we've asked over a number of years, what attributes are you looking for on your board? What are the important attributes that you want in board members? And the top 3 continue to be financial expertise, industry expertise, and operational expertise. So that was a constant. What wasn't a constant is a question we started asking a few years ago about how satisfied directors were with the performance of their peers. And the question was, do you believe that someone on your board should be replaced? And I was shocked the first year we asked the question that it was 31% of directors who said that. This year, 39% of directors said someone on their board should be replaced. So a pretty big jump over the course of just several years. And when we asked the follow-up question around, well, if you believe someone on your board should be replaced, and nearly 4 out of 10 do, why hasn't it happened yet? And the number one reason that we were given, the finger was pointed really at board leadership. So think the lead director, the chair, the committee chairs, that board leadership was unwilling to address the issue. And it's a difficult conversation, but it's certainly one that's necessary. The second area was self-assessments and whether or not the self-assessments that the board is using are effective in evaluating individual director performance. I would just say the other big thing from a board composition point of view was around diversity. And nearly all directors who responded to the survey said they believe that board diversity is an important attribute. And in fact, 8 out of 10 said that it not only improves board performance, but they also believe that it helps improve the company's performance. So directors clearly value diversity, clearly think it's important to the board and the company, but 70% believe there are impediments to having a more diverse board, to adding more diversity to their board. And it's not around the question of unwillingness. It's not an unwillingness on the part of directors to add that diversity. The number one reason they give is a lack of qualified candidates, diverse candidates.
Yeah, I'm not sure that that's, I mean, a lot of people would argue that somebody isn't looking hard enough if they would say that there aren't qualified candidates out there. But your earlier comments, it really gets to board leadership. And I know you at the center, and certainly we here on the show, have always stressed the importance of board leadership, So let's, when I took a look at it, the issues that jumped out at me, the results and the highlights that jumped out at me was one were the questions and the results on activists, and the other was shareholder engagement. And we know those are two very big areas in 2015. So
absolutely,
what did you see specifically in the way of results there?
Yeah, I mean, the shareholder activism environment has certainly ramped up. I think we all agree on that. You're looking at over $120 billion in assets under management by activists. Proxy contests, this past proxy season, record number of proxy contests, record number of settlements in which an activist attained a board seat as part of that settlement. So the environment has certainly gotten hotter. So perhaps it's not unexpected that when we asked directors about activism, they told us that they've been talking about it more in their boardrooms, as you would expect. Nearly 50% of the directors who responded said that they were having significant discussions about shareholder activism over the last year in their boardrooms. And that isn't just directors on boards in which activists have taken a position, but overall boards in general. So they're talking about it more. They're also looking at how to prepare for it to a greater extent. So perhaps the number one thing they told us is nearly 70% of directors now say they're communicating with their largest institutional investors. So more communication with investors, but then they're doing other things in anticipation of shareholder activism. They are using stock monitoring services so that they can track who is coming in and out of the stock more quickly, and asking for reports from management on that. They're reviewing their strategy to look for potential vulnerabilities that an activist might target, whether it's from a balance sheet point of view or it's from a governance point of view. They're looking more closely at their board composition, making sure that they have all of the types of expertise and the profile of directors that would make them less vulnerable to an activist attack on either the experience or overall composition of their board. And they're hiring outside experts to evaluate whether or not they're vulnerable to activism. So they're taking a variety of tacks there. On the communication side, I think the good news there is that directors have come a long way, even over the last 2 or 3 years, in ensuring that there are protocols in place that will allow for productive communications directly with investors. So the who, what, where, why, and how. What topics are appropriate for discussion, direct discussion with an investor? What is the process by which an investor would request a direct dialogue with the board? What type of preparation should the board have prior to that occurring? What's the format of that? And who on the board does it? Identifying, whether it's the chair or the lead director or the chair of one of the committees or someone else on the board. But really, a lot of growth we saw this year compared to 2 or 3 years ago in the percentage of directors who said their companies had established those governance guidelines for communications.
Yeah. So we have about a minute left, Paul. What else? What are the other topics that sort of jumped out at you, in the survey? And then we'll tell people how they can get a copy of it. So
Sure. So I guess 2 major things. One would be around board materials, and the other would be around boardroom discussions. And this is for the executives, members of management who are watching today's episode. There is room for improvement in that area, according to the directors we surveyed. They'd like to see better materials. 2/3 say they want more management insights and better highlight the risks, and they want more lead time. The volume is too much. And on the discussion side, they want the conversations to be more spontaneous. They want the conversations to be less scripted. They believe that management is focused on the right topics. They would just like more give and take in those meetings. So I would, what I say there is, focus on executive summaries, focus on using that time that you have to really provide analysis to your directors in the context of board meetings.
yeah, no death by PowerPoint. They
Absolutely
don't want
not.
death by PowerPoint in the boardroom anymore. No. So there is so much in this survey. How can people get a copy of that? And then we'll try and put that up on our screen as well. But how would they go about getting a copy of the results?
Sure. So this would be found on PwC's website, pwc.com, at the Center for Board Governance. And so it's right on our homepage. You can download a copy of the entire survey or individual segments if that's what interests you.
And we'll try and make sure that we have a link on our site as well. So, Paul, I want to thank you for taking the time to come in and talk about the survey.
Thanks so much,
Appreciate
TK.
it. And that will conclude this edition of Inside America's Boardroom. We hope you enjoyed the show. We'll be back again next week when we take a look at another critical topic that'll help you be a better board member or committee member. So we'll see you then.
Join us again next week for Inside America's Boardrooms. Brought to you with Knowledge Partners, NASDAQ, the Center for Audit Quality, and PwC. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, R.R. Donnelly, and the Society of Corporate Secretaries and Governance Professionals.